If you receive Social Security in any form, pause for a moment and stay tuned, because three distinct updates are impacting seniors right now. Every single one involves money that already belongs to you. One could disrupt your monthly payment if you fail to take action on time. Another could return up to $6,000 to your pocket during tax season, funds almost nobody realizes they are eligible to receive. And the third establishes a firm cap on what you will ever pay out of pocket for prescriptions again, provided you understand the specific program that unlocks it. These updates are connected to active deadlines right now in 2026. Your check, your tax refund, your prescription medication. Here is my main concern. Most people I speak with have either never heard about these three developments, or they saw a quick headline about one without learning the precise steps needed to claim the money. A simple headline will not handle your paperwork. An application does. A phone call does. That is why I am breaking everything down for you today. Clear language, direct steps for each situation. I am not an expert, but on this channel every week I share practical financial updates that directly affect older adults, including rule updates, benefits you already qualify to receive, and actions that yield real results. This is the exact type of content I share each week, and you certainly want to stay informed. If this is the kind of guidance you find helpful, be sure to subscribe and enable notifications right away. Now, let's dive into the details. Why isn't this information widely discussed already? Because none of these changes arrive with a personal telephone call. They appear tucked inside lengthy legislative bills, posted on government web pages that few people read, or introduced quietly while media outlets focus elsewhere. Nobody calls to send a reminder before the deadline passes. When you remain unaware, that money simply stays unclaimed. So let's fix that right now. First change. Paper Social Security checks are being phased out completely. Let's start with the issue that has a strict timeline. The federal government is ending paper Social Security checks and transitioning everyone to electronic payments. If you or a family member still receives a physical paper check, this is urgent because time is running out. Here is the background. In March 2025, an executive order directed federal agencies to shift payments, including Social Security, away from paper checks to electronic delivery. Treasury set a target to end most physical check mailings by autumn 2025, and the Social Security Administration has worked to finish this transition for remaining recipients throughout 2026. This is not an instantaneous complete shutdown. Small hardship exceptions remain available. According to official agency statistics, under 1% of beneficiaries still relied on paper checks recently, a number that continues to drop. However, the path ahead is obvious, and believing the government will simply keep sending paper checks is no longer realistic. If your monthly benefit already arrives through direct deposit, you are all set and do not need to take action. But if you or an older relative are still waiting on mailed paper checks, now is the time to act, because a payment without an electronic account to land in might not reach you at all. Consider who usually receives paper checks. Typically, the oldest beneficiaries who feel less comfortable using online banking tools. These are the exact individuals who can least afford a missed payment, which is why I strongly encourage you to share this update with them today. You have two primary options. The first option is standard direct deposit into a checking or savings account set up through your financial institution or your online My Social Security account. The second option, which many beneficiaries remain unaware of, is the Direct Express card, a prepaid debit card where the government deposits your monthly benefit. It is specifically designed for individuals who do not use traditional bank accounts. To set up direct deposit, you will need your bank account number and routing number, both located at the bottom of a check, along with your Social Security details. Next, log into a free My Social Security account to submit your banking details. Call the SSA directly, or visit your local bank branch so a representative can assist you. Banks process these setups daily. For Direct Express, apply through the program directly, and once your card is issued, your monthly benefit will load automatically for use anywhere debit cards are accepted. Now, let me address the common pushback I hear. I prefer holding a physical paper check. That preference is understandable, but mailed checks face a much higher risk of being lost, stolen, altered, or delayed compared to electronic transfers. Mailbox theft targeting federal benefit checks remains a serious, widespread problem. Criminals steal envelopes directly from mailboxes and cash them, leaving recipients stuck fighting for weeks to prove they never received their funds. Electronic payments eliminate that vulnerability completely. Furthermore, electronic processing costs the government significantly less, which drives this policy shift. One important detail: if you face extraordinary circumstances with no realistic access to banking, Treasury offers a hardship waiver. You can call 1-877-87-46347 to inquire about it, though waivers are reserved for genuine hardship cases rather than simple preference. For virtually everyone watching, enroll in Direct Deposit or Direct Express right now before a paper check goes missing. Next, here's what I encourage you to do. Review the benefits, discounts, and assistance programs that most seniors qualify for but rarely claim. I gathered these resources into a single location, organized by state and specific program, so you avoid wasting hours searching through confusing government sites. It is fast, clear, and easy for any senior to find applicable options. Regardless of where you live, valuable support is likely available that you have not claimed yet. It is called the Senior Exemption Playbook, located in the first pinned comment right below this video. One tap gives you full access. Stay right here because our final topic offers the largest financial benefit in this video, a program that can lower your prescription costs down near zero, yet almost nobody on Medicare ever remembers to submit an application for it. Second change, the new $6,000 senior bonus deduction. This update is not about safeguarding existing benefits. It is about claiming extra money you likely do not realize is available. Included within the 2025 federal tax legislation is a brand new tax deduction that the IRS calls the Enhanced Deduction for Seniors. Most tax preparers simply call it the Senior Bonus Deduction. It represents one of the most substantial tax breaks provided to older Americans in recent years. Yet most eligible seniors still have not heard of it, meaning many are on the verge of leaving real money behind. Here is how it operates. If you turn 65 or older by the end of the tax year, you can claim an extra deduction up to $6,000 per qualifying individual on top of your standard deduction and the existing age-based standard deductions seniors already receive. If both spouses in a married couple are 65 or older, up to $12,000 total becomes shielded from federal tax. For many retired couples, that translates to over $1,000 added to their tax refund, often turning a tax bill into zero tax owed. Consider a married couple, both age 67, whose income falls safely below the limit. Both qualify for the full $12,000. A single retiree, age 70, claims the entire $6,000 on her own, simply by being 65 and marking the correct box on her return. Neither required complex financial steps, restructured assets, or itemized expenses. What makes this deduction especially accessible is that it functions as an above-the-line deduction without requiring itemization or keeping shoeboxes full of receipts. You simply take your regular standard deduction, just as most retirees do, and stack this extra deduction right on top. However, strict income limits apply. The full $6,000 deduction is available up to $75,000 in modified adjusted gross income for single filers, or $150,000 for married couples filing jointly. Above those limits, the benefit phases out gradually at roughly 6 cents per dollar over the threshold, disappearing entirely once income reaches $175,000 for single filers or $250,000 for joint filers. Most retirees relying on Social Security and modest retirement savings sit comfortably below those thresholds. But a single unusually large IRA distribution in a given year could inadvertently push you over. Here is where my experience as an estate attorney connects directly with tax planning. The income counted includes more than Social Security. It includes retirement withdrawals, interest earnings, dividends, and profits from real estate sales combined together. If you anticipate a large withdrawal or property sale in a year you plan to claim this deduction, that move could reduce or eliminate your benefit. If your income sits near the cutoff, dividing a large distribution across 2 tax years instead of taking it all at once could preserve your full deduction rather than forfeiting a portion. Planning ahead during autumn is far better than facing an unwelcome surprise in April. One additional detail: married couples generally must file joint returns to qualify, as filing separately excludes you from claiming it. So what action should you take? On Form 1040 or Form 1040-SR, this deduction is claimed using Schedule 1A. Inform your tax preparer directly. I am 65 or older, so please verify that you are applying the senior bonus deduction. If you prepare your own taxes, reputable tax software will ask your age and guide you to the proper form. Just avoid skipping through prompts too quickly. Now, here is a crucial point that very few people realize. This deduction covers tax years 2025 through 2028. If you already filed for an eligible year and missed it, you can submit an amended return using Form 1040-X, and the IRS can send you the remaining refund difference. A couple unaware of this option could leave up to $12,000 of tax-shielded income unclaimed each year throughout that 4-year tax window. Third change: the new $2,100 prescription drug cap. This third update affects anyone watching who relies on regular prescription medications, because it creates a strict maximum on expenses that previously had no limit whatsoever. For years, the most challenging aspect of Medicare drug coverage was the total absence of an annual cap. If you needed expensive medications, specialized biologics, or specialty treatments costing thousands of dollars, you simply kept paying month after month. That situation changed because of the 2022 Inflation Reduction Act, which phased in major reforms over the last 2 years. Here is the key figure. In 2025, federal law capped total out-of-pocket spending for covered Medicare Part D medications at $2,000 for the year. Because this spending limit adjusts for inflation, the cap rose to $2,100 for 2026. Once your out-of-pocket costs for covered Part D drugs reach $2,100 this year, your payments end for the rest of the calendar year. Your drug plan pays 100% of your covered medication expenses from that point forward through December. Here is the aspect that surprises beneficiaries in a very positive way. If you take high-cost specialty drugs, you pay standard copays starting in January while counting toward that $2,100 ceiling. For seniors using the most expensive medications, that spending limit can be met as early as late winter. From that moment through December 31st, every covered prescription costs you $0, allowing individuals who previously split pills or skipped doses to finally take their medications exactly as prescribed. What counts toward reaching the $2,100 limit? Your plan deductible, co-payments, and co-insurance for covered medications all count toward the cap. Your monthly plan premium does not count, as premiums are billed separately. Medicare drug plan deductibles are also strictly capped, meaning no plan can charge more than $615 in 2026. That deductible contributes directly toward reaching your annual out-of-pocket ceiling without exceeding it. Now, here is the specific step that turns this reform into maximum savings, particularly for those on limited incomes. A federal program administered by Social Security called Extra Help, also known as the Part D Low-Income Subsidy. It is tailored specifically for seniors with limited income and assets, providing substantial reductions on monthly premiums, plan deductibles, and prescription copays alongside the annual cap. Many eligible seniors never bother to apply because they assume their income is too high, or because they have simply never heard of the program. Do not assume you are ineligible. Income and resource thresholds are much higher than most people think, and eligibility rules have expanded in recent years. You can apply directly through Social Security online or over the phone. If money is tight and you have Medicare drug coverage, submitting that single application could prove to be one of the most financially valuable steps you take all year. You might think, I probably make too much money to qualify, so why waste time? Stop right there. Eligibility thresholds are broader than almost everyone realizes, and individuals turned down years ago might easily qualify under current rules today. Applying costs nothing, allowing Social Security to calculate your actual details. If approved, extra help can lower your prescription costs so dramatically that your medications become nearly free, combining directly with the annual cap discussed earlier. Summarizing everything today. Take one concrete step for each change. Paper Social Security checks are disappearing, so switch to direct deposit or direct express immediately before a payment gets delayed. The $6,000 senior bonus deduction is active, so ensure you or your tax preparer claims it, and if you missed it on a previous tax return, file an amendment using Form 1040-X. Finally, out-of-pocket drug expenses are capped at $2,100 for 2026, and if your household income is limited, apply for extra help through Social Security to lower your costs even more. Your monthly benefit, your tax refund, and your prescription costs are all real matters waiting for those who take action. Seniors who take these steps retain thousands of dollars, while those who remain unaware miss out. Make sure you belong in the first group. This content is for general educational purposes only and does not constitute formal legal or tax advice for your personal situation. Always confirm your specific figures with Social Security, the IRS, or a qualified financial professional before taking action.